Milestone number 8 of closing your first deal, manage the property for maximum profits. So you've jumped through all the necessary hoops to arrive at your final milestone of closing your first deal. But once you've closed on the property and cashed your acquisition fee check, of course, it's now time to let your property manager take over, stabilize everything, and implement your business plan. So in this video, I'm going to review 8 ways that you can add value to your property and manage your property manager to increase your cash flow. At the end, I'll go over weekly, monthly, quarterly, and annual checklists to make sure the building is maximizing your profits. Hey, I'm Michael Blank. I'm a full-time entrepreneur, investor, and coach, and I'm passionate about helping others become financially free in 1 to 3 years by investing in real estate. Through my investment company, Nighthawk Equity, I control over $300 million of real estate, and I've helped my students acquire over 14,000 units at the time of this recording. So hit that subscribe button and notification bell if you want to be financially free in 1 to 3 years. And let's do this. All right, by now you're already familiar with the power of commercial real estate. For example, if you're able to increase rents by $50 and decrease expenses by $50 per unit per month on a 24-unit building, you've increased the income of the property by $28,800 per year. All right, so that's $100 per unit times 24 units, and that's $2,400 per month times 12 months. So not that much, okay, not that much, but it is a lot more, because let's assume that the capitalization is a ridiculously high 8.5%, okay, which is, I haven't seen that in years, but let's say it is. Then your tiny increase increased the value of the property by $338,000, right? And if the cap rate is much lower, it'll be nearly $500,000 just by increasing it by $50 on the rent and $50 by the expenses. Does that sound a little better? Well, yes, you say, but how do I create this value? And so here are 8 tips to increase the income of your asset and increase the value to maximize your profits with apartment building. Tip number 1, reduce your water bill. Now, in many cases, you, as the owner, are paying for your tenant's water bill. Not always, but in some cases. And the biggest reason the building's water bill is high is because there are leaks and drips everywhere. The best way to catch these is to encourage your tenants to report them or to look for water issues whenever the property manager enters the unit and to do regular inspections. Another way you can drastically reduce your water bill is to install low flow toilets, faucets, and shower heads. Now, there will be a capital expense to do so, but the break even is several months, not years. Tip number 2, reduce your heating bill. If you're paying for heat, then your heating bill will be a challenge to control, and that's because your tenants will have the heat turned to full blast in the middle of winter with the windows wide open. This is why you should try to stay away from buildings where you have to pay for the heat. A good option is if you're paying for the heat, is a programmable thermostat. Even though the tenant could override the programming, most will not do so because it's too complicated to figure out. If set to EPA standards, programmable thermostats can save a significant amount of energy and cost. Tip number 3, reduce your electric bill. Another way you can reduce your electric bill is to replace all lighting with energy-saving bulbs. Tip number 4, challenge your property tax assessment. If you're buying a property that's potentially below its tax assessed value, you should appeal the tax assessment. The process may take several months, but it's worth it. One of my buildings was assessed at $650,000 and had a $5,100 per year property tax bill. Now, I bought it for $475. Now, appealed the tax assessment, got reduced to $525, which reduced my taxes to $3,800. Tip number 5 is to price shop your vendor contracts annually. Each year, price shop your insurance, trash, landscaping, janitorial, and other vendor contracts to see if you can improve over the previous year. Tip number 6 is to increase rents. Obviously, this is the most obvious way to do it, and sometimes this is easier said than done for a variety of reasons. One is you should have your proper manager be on the lookout for ways to increase rents at all times. If the rents in your building are below average in the area, ask yourself why that is. Perhaps the other apartment buildings are in better condition or offer better amenity. Now, before you buy a building, be very clear what your business plan is to increase rents. You may decide that the exterior of the building needs work to look more appealing and more comparable to the competition. This may require the installation of awnings, a new sign, painted shutters, and improved landscaping. Sometimes even minor cosmetic upgrades like this improve the curb appeal substantially and make the property more desirable. The size of the units affects the rent. If your units are below the average size of the area, it will be tough for you to get the average market rent. If the competition has a laundry area and you don't, then this will put downward pressure on the rents as well. Same thing for washer dryer hookups if you don't have them. But if your product, your property, at least matches that of your competition and your rents are below market, then it's time to increase rents. If your building is in a rent controlled area, then you can't arbitrarily increase rents as you please. Rent control laws regulate exactly how much you can and cannot increase rents. Therefore, increasing rents in a rent controlled area can take a long time unless you do subsidized Section 8 housing. And those are typically exempt from rent control control. The local housing authority who runs a voucher program typically pays above market rents for their tenants, so this is a great way to increase income and reduce delinquencies in the right areas. If your building is not in a rent-controlled area, then you can send the rent increase notice as soon as the lease of each tenant expires, but typically not before then. So you need to consider the impact of a rent increase on turnover expenses and vacancies, but essentially you can ask whatever you want when that lease is up. So make sure you increase the rents by something each year. You're 2 to 3% at least, so that the tenants get used to an annual rent increase, even if it's very little. Tip number 7 is install laundry facilities or vending machines. Do not underestimate the income from laundry or vending machines. Let's do some quick math on a washer and dryer. Let's assume each unit does 2 loads of laundry per week. Let's assume one washer load costs $1.25 and the dryer also costs $1.25. That's $5 per week or $260 per year. At a 10 cap, you just added $2,600 value per year. No, this is just a super easy example of easy math, right? If you have 10 units, then you just increased the value of your building by $26,000 just by adding laundry facilities. So some easy math on some small increases. This is what I'm trying to get at. Now, in addition to increasing the income, you can also add an amenity to the building, which may allow you to ask a little more in rent. Tip number 8 is pass on utility expenses with the RUBS system. RUBS stands for Ratio Utility Billing System, and it could be appropriate for situations where the constraints of space or construction do not allow a property to be sub-metered. Sub-meters means to have separate gas, water, or electrical meters installed for each unit. So RUBS can be done for almost all utilities, including water, wastewater, electric, gas, and trash. Now, implementing a RUBS system often requires no upfront capital investment. It uses pre-calculated formulas based on industry-wide usage statistics. Once the RUBS system is in place, each tenant receives their own utility bill, which they must pay. While it may be technically and operational feasible to use a RUBS system and pass your utility expenses to the tenants, you first have to determine whether the market allows you to do it. If you're the only owner passing along utility expenses to your tenants and everyone else pays for water and heat, then you may have trouble filling your units or getting market level rent. RUBS is most appropriate when it's customary for tenants to pay for utilities, but the building you purchased is not separately metered. If the market allows for it, RUBS is an excellent way to increase your income. Making money with apartment buildings is all about creating value. What I like about apartment buildings is that even a little value can have a huge impact on profits. Increasing rents a little bit here, adding laundry machines there, revaluing your contracts, and watching your utilities all contribute a little bit to the bottom line. Now multiply that little bit by the number of units for the entire year and divide it by the capitalization rate, and the result of your little improvements can mean huge profit. Best practices for managing a property manager. Once you've closed on the property, it's time to manage the property manager. I want to share with you some best practices I follow on a weekly, monthly, quarterly, and annual basis to make sure that the building is performing to plan and maximizing your profit. But first, if you find this video useful, hit that subscribe button. Weekly activities, you're going to monitor the income. You need to know what's going on with your income. Which units are vacant? When will they be rent ready? How many viewings were there? How many applications were received? Do you need to adjust the rent or offer some kind of incentives? You also want to know which tenants are behind in their payments, also called delinquency. Find out from the manager why they're behind and if legal action is necessary. I found that the right combination is prompt legal action coupled with proactive communication. Understand all bills paid. You want to know what bills your property manager paid last week. What was it for which unit? Was it necessary? Could have been avoided? Was it a misbilling? Or could it have been done cheaper? You want a record of every bill the property manager paid, how much, who the vendor was, a description of the expense, and for what unit. And sometimes someone else's bill will show up in your records. Errors are easily made, but only you will catch them, I guarantee it. Bulk trash has been a real issue, for example, in one of my buildings in DC. This is where your tenants and neighbors throw out big items that don't fit in trash bin. They just dump it by the trash bin. And so, for example, for the last year, the city has been enforcing bulk trash with hefty fines. As a result, my property manager leased a truck to go by each of the properties to pick up any bulk trash to avoid the fines. This is a great service, but each time they pick up any bulk trash, they charge me $65. So in the last couple months, I've had to put 3 pickups per week. Now, because I noticed these escalating costs in my weekly review, I was able to address the issue with the property manager. So we decided to upgrade to a larger trash bin to see if that would cut down on the amount of bulk trash. Well, we'll see if it works, but the point is you're catching issues as soon as possible so you can make adjustments quickly. Weekly calls with your property manager are critical. I found that a short weekly call with your property manager is key to staying involved with the property. Many of the key metrics you need should be available from the property manager's online management website. Review those first, and then follow up with a regular phone call to ask questions and discuss any issues. All right, every single month, the property manager is going to create a profit and loss report. And once per month, I look over that statement, and typically the property manager will provide that report, or you can download it from the manager's online portal. And your property manager may not track every expense like your mortgage or real estate taxes, insurance, and you may have to add those expenses to create the final P&L report. So I like to compare the trends from month to month, and so trends as well as actuals versus projected. So also review work orders that come up, and also look at those as well. Specifically look for two things. Are there any units that are costing more than others? If so, why? And what can we do about it? Number two, how long does it take to close out work orders? So establish an acceptable baseline with your manager and then track this metric. Work orders that don't get addressed on a timely basis can result in unwanted turnover. Quarterly activity. All right, so here are the quarterly activities. Number one is we make distributions. So once per quarter, I pay myself and my investors. You already have the P&L report done from your monthly activity. The only thing you have to do is create a cash flow and bank balance report. See what you have in the bank account, deduct any bills that are due in the next couple months, like real estate taxes or larger repairs, any escrows, for example, like real estate taxes that you want to keep in reserve. And this will vary these reserves, but you definitely want to keep in the bank account. Otherwise, a bill comes due and you don't have any money in the account. That's awful. And then whatever's left whatever's left in your spreadsheet, you can distribute. Quarterly, also, you want to analyze turnover. So if you've turned over any units in the past quarter, I want to understand why they turned over, if there's anything we could have done to avoid it. So ask my property manager to talk with the tenant to find out maybe why they're moving out. Or if you feel you're having an issue with turnover, one thing you can also do is to mail a questionnaire to each of the tenants with a self-addressed stamped envelope to get feedback from them. What do they like about living at the property? What do they feel you could do better? All right, here's the yearly activities. Number one is I review all the service contracts. I look at insurance. That's a big ticket item, typically trash, landscaping, snow removal, common area cleaning, and then I may bid out some or all these contracts to see if I can save any money. The other thing you want to do is you want to complete your year-end report for your investors. This is an important thing to do. Even if you don't have investors in the deal, you should do an analysis of how the year performed. Include the annual P&L with the monthly numbers, as well as your budget P&L, plus a narrative of your actuals versus budgeted, if there's a difference of why that might be, and explain why and what can you do differently in the new year. Then you want to create the budget for the next year. So based on past year's performance and the changes you want to make, create the pro forma projections for next year and get your property manager's input and get them to commit to it. Then track your actual performance as you repeat the cycle of review and adjustment. It's a mistake to let your property manager do whatever he or she wants without any oversight from you. Interact with your property manager at least once per week and review the key metrics regularly. If you do, you can make adjustments promptly and ensure you're on track to maximize your property's value. The good news about this, once you got it dialed in, it can take you 30 minutes a week just to manage any kind of size property. It's absolutely magical. Look, there's a lot of stuff here, and I'm glad you're learning a lot, but if you want someone to help you, if you want us to help you get into the game, find deals, analyze deals, make offers, and manage those properties for maximum value, then check out our resources that we have. We have a lot of training resources, mentoring resources, etc. The best way to do that is just to book a call with us. Go to themichaelblank.com/call, book a call with us, and we're going to see what resources would help get you to your goals fastest. Okay, so you're now off to the races. You closed on the property, you're managing your manager on a consistent basis, you're carefully monitoring the key metrics that will maximize your profits. And if the property manager is doing their job and executing on the plan, managing this property moving forward can take only half hour a week or even less. This is one of the main reasons I love multifamily investing. Yes, the closing can be a bit stressful, but if you have a good property manager and they've stabilized the property, you can run this business with very little time, given the passive income and long-term wealth they can produce, more so than any other business I've seen. So now that you've closed the first deal, something very interesting happens, and that is the law of the first deal takes over, and you become a magnet for deals and money. The force is so powerful that you would need to exert extra effort to not do the second and third deals. So hit that subscribe button and notification bell, and let's explore why the law of the first deal is so powerful and how you can leverage it with very little effort to become permanently financially free. Let me know your thoughts or questions in the comments below. I'm going to see you in the next video where we talk about the power of the law of the first deal.